Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. I'm muted. Dude, worst start to the stream ever. I thought I had a little bit more time. Sometimes it's like, it seems like the intro is forever. And then sometimes it just goes right into it. And I'm like, wait, I'm not ready yet. I was still dabbing my eyes. Okay. Guys, it's Thursday. We're going to get economic news today. It's been a pretty quiet week on the economic news front. So I think that the stuff that we get here in the form of jobless claims is somewhat important. Also, we do get some PMIs, S&P services PMIs, and existing home sales. So, and we have a 30-year tips auction today, few Fed speakers, things like that. And if you come over here to our main screen, you can see that we are back in the money on our treasuries. So we got about a minute and a half. Let's be really, really fast here. So you can see the treasuries took a big clip lower. S&P 500 going just absolutely bonkers over the NVDA earnings. I guess we'll probably be talking about a lot about NVIDIA today, won't we? Yes, NVIDIA. And then here's oil. Oil doing okay, but kind of peaking in the overnight session. Gold and silver still up there, but getting a little depressed by the treasuries all taking a good clip lower, and copper maintaining its gains from the few days previous, and the dollar taking a big slump here overnight, but recovering most of it, getting as low as 103.3 and back to 103.75. And it looks like a lot of that is actually coming from the euro. This is not the Japanese yen. So come back here. Yeah. Big spike in the euro. Now, what was that? Because I don't remember there being any mention of it, something like that, in my rundowns overnight. Okay, so here is the news. And we are getting initial jobless claims lower than expected at 201K versus an expected 216. Wow, 201, that seems really, really low. I'm going to come back over here to Forex Factory really quick. I feel like I'm just all over the place. Trying to roll with it. Unemployment claims. Okay, it's not the lowest. The lowest that we've had was like 185. Oh, there you go. Speaking of NVIDIA, throw in like a freaking ad in the upper right corner of my stream. Okay, we did also get like Canadian retail sales and things like that. We usually ignore those numbers, but this week at least, we have seen the market react a little bit more to Canadian numbers than usual. So their retail sales month over month was spot 9 versus an expected spot 8. But then their core retail sales was lower than expected at spot 6 versus actual spot 6, expected spot 7. So, interesting. Was a pretty strong, like, push down, but pretty fast pullback too. So, wouldn't surprise me if they retraced it. I don't know. The treasuries is very interesting because yesterday the 20-year auction did tail quite bigly too. They recovered most of the damage, but it tailed. It was not a good auction, and the 20-year in particular has been really strong because it was like special at auction and things like that. But apparently they've moved on. The shift in the 20-year, that's an interesting change. We have one in the 30-year chips, so that's going to be interesting to watch. But then there was the big move down overnight. And like when I look at the larger economic environment, it's just, okay, we're supposed to get a soft landing. This does not feel like landing, okay? NVDA busting through everybody's estimates 2 times in a row now. How can you have a stock that is just up so much that everybody is watching, that everybody is in, and they still outperform all of the analysts' expectations twice in a row? What is wrong with the analysts here, man? How are they underperforming it so badly? That one's really, I mean, like, I tell you, the market is not efficient. There are things that you could know right now that aren't fully priced in. I thought that the analysts were better than that, though. Come on. Wow. How does that happen? And you can't have a landing like that. You can't. There's supposed to be a soft land. That's not landing. That's like you were starting to come back down and you're like, no, let's go to Vegas instead. Right? Like, it's just nuts. It's just nutty stuff right now. And the treasuries are now starting to finally, I think, react to it by saying, oh, maybe interest rates need to stay higher for longer. You know? But it was something from Europe that pushed us overnight. And you know, when I was reading through, so I'm going to come back here. Hey, Squawk. That's my first place for that kind of overnight information. There was some PMIs, so I'd have to assume. Actually, no. Let's do it this way. Let's go to Forex Factory. So the move was at 1 o'clock. No, it was 1:15. That's also a little weird. All Thursday. Okay. They did mention PMIs, that PMIs were higher than expected. So I guess when the PMIs were higher than expected, the euro jumped, and that's why the dollar dumped there. And then, but the treasuries didn't start selling until significantly later. They didn't start falling until about right here. So that is probably then them saying, oh, well, okay, right now Europe is in recession, so you're not going to get very high yields. But maybe things are starting to look a little bit better over there. We're going to take our money out of the US and put it in Europe. That's a problem, too. Okay. Either way, I think that all kind of bodes well for our little short here in the treasury. Cross my fingers. I gotta tell you, I am really starting to buy in emotionally to this kind of a trade. Because initially I took like multiple contracts and I made like 300 on the few contracts, and then I just let the last one run. But if we just count the last one, that was like 800. And to make 800 off of one contract for me in the treasury would be pretty darn good in a month. That'd be pretty darn good. And all I had to do was just go short and hold it. I don't know how that would work over 1,000 trades, but at the moment it looks like a better gig. You know what I'm saying? So now I want to go back NVIDIA. So we were talking here. Somebody was saying, yeah, I said the question now is if they can keep indexes up tomorrow after the big anticipated event is over with. Yes. On the open, will you see continued buying, or will the S&P start giving it back? Here's the big question in my mind. If you go on the hourly chart for the S&P, you can see how they were contesting the diagonal bullish trend line, which is held since the beginning of the year. And this kept us going after all the major fundamental data coming into play as of the last few weeks. Hear you barking, big dog? Okay, so there was this guy talking about the uptrend. So I think that he's talking about, oh no, wait, that's treasuries. We want, yes. I think he's talking about that uptrend. But any kind of trend line that you're drawing on there, I think that doesn't last for very long. Because that's a short-term trend, right? I also think that we're probably due for a return to the 100-day moving average soon. That can't just go up all year, can it? Well, I don't know. If NVIDIA keeps making so much money and outperforming everything, maybe it can. Maybe it can. I think we're seeing something in the stock market that is just, we have no comparison. It really, truly is unprecedented, because what we are seeing is a major technological revolution that has the potential to completely transform the economy. And we've seen those before. We've had the internet and the industrial revolution and all of the things like that. But this time, the gains are truly centralized in one key stock. They all need NVIDIA chips. Nobody else is even close to NVIDIA's performance in AI training tasks. And so there's this thing like, can the market continue to go up on one stock? Can this one stock really continue to move up as much as it is? Well, I think as long as they continue to outperform earnings, yeah. I think yeah. It may truly just be a special case that's so unprecedented that all of your kind of like, well, this is a little bit unusual, that normally doesn't happen, and ergo it should probably come back at some point. Those just might not be applicable in this situation. It just might not be applicable in these situations. Well, so the treasuries, they did have the big sell. They recovered. I'd say it was a pretty good recovery, but it was mostly like them just filling back in the hole. In fact, I checked the cumulative delta here. Yeah, it wasn't that big of a change in cumulative delta. And in fact, all three of these instruments continue to sell despite the treasuries kind of floating back up here. So that's interesting. But I'm kind of thinking that if once they hit the open, that things might kind of cool off a little bit. Nothing new on Zero Hedge. There was somebody arguing with me on Reddit if they respond. Oop, they did. But they didn't actually respond with anything. For real. No. was like, he made this post, and I destroyed all of the logical fallacies that he had posted, and I was like, don't waste my time again if you're not going to like post real actual arguments. And then he didn't. He said, who was it again was president when the PPP loans were signed? Well, it was Donald Trump. But that has nothing to do with the discussion that we were having, which was what caused inflation. What is the driver of post-2020 inflation? You know, we've talked about this a couple of times, but I don't think that we really... I don't think that I really went into, like, what the argument was, and I think it's a really good one. So let me go into this. So this is a story from the American Institute for Economic Research. So these are like pro-capitalist, pro-American, kind of Republican-leaning think tank that puts out economic research. And this is not, I would not call this an economic research paper, okay? It is an opinion piece, okay? But he does cite economic research. And I'm going to skip kind of like the color and everything here at the beginning and come to his main argument. It's really funny because every time that I post this, the Democrats are like, he's not even making like a real argument and it's just trash and all this. It's like, no, he cites economic data and makes an argument off of this economic data. And it's a really good argument that I think just absolutely dashes all of these arguments that inflation is being driven by corporate greed. Do they actually sound like that? Dude, the things that like some of the people that argue with me on Reddit say are just so crazy. I mean, every once in a while I do run into somebody that's pretty smart and reasonable, but most of them are just like, I'm smarter and more superior than everybody else, but I'm never actually going to make a real argument to prove it. You know, there's a lot of that. It's really crazy. Yeah, practically speaking, I don't understand why corporations suddenly got greedy and drove inflation. Yeah, okay, so listen to this guy's argument because I think it's really rock solid. Below is the Federal Reserve Bank of San Francisco Fed PCE, personal consumption expenditure, inflation dispersion metric. This tracks the number of goods and services within the index that are increasing or decreasing over a 3-month smoothed period. Okay? So it's saying this many things are increasing and this many things are decreasing. That makes sense? So you have all of these different sectors of the economy. There's all of these different goods, okay? We look at one overall metric about what inflation is, but what is going on internally? What are the individual things doing, right? The red line indicates the percentage of index goods and services that were rising, and the blue is the percentage of those that were falling. Between roughly July of 2021 and June of 2023, over 90% of the thousands of prices in the constituent members of the index were rising, while less than 10% had falling prices. In December of 2021, a 3-month smooth percentage of PCE constituents with rising prices stood at 97.45%. Those with falling prices totaled a negligible 2.55%. As the end of November 2023, nearly 87% of the prices of goods and services in the PCE were rising, with just over 13% declining over the same period. Okay, so he's just explaining what the data did. I tell you, if you want my respect, cite data. I absolutely hate how all of the discussion in this country is all of a sudden like not about data. I would have thought that liberals would have been all about data, but apparently not. Okay, so here's the data. Why does it matter? The share of items, expenditures, and expenditure categories show price increases 2 standard deviations above the 12-month inflation rate over a 5-year range. Firms deliberately raising prices would explain an increase in one or a handful of prices, but not a nearly simultaneous increase in practically every conceivable price in the economy. As mentioned previously, when oil or gas prices, or the price of anything else for that matter, haircuts, milk, tractor tires, etc., increase, consumers adjust, and the prices of other goods and services tend to fall. These are relative price changes, adjustments in the prices of goods and services to one another. Okay? In other words, if I have to go and spend more money on gas because that's something that I absolutely have to have and I can't get to work without it, then that means that I can't spend money, as much money, somewhere else. So I would see the price of gas rise, but the price of other things actually go down because the demand in other things has declined, right? The only economic phenomenon which can result in nearly all of the prices in an economy rising at once is a rapid increase in the total amount of money in an economy, such as the purposeful Federal Reserve policy response to the COVID-19 outbreak in 2020. Yes, and the government stimulus. Do painful rising prices for which the Federal Reserve alone is at fault result in higher prices? So he's incorrect that it's the Federal Reserve alone is at fault. Okay, there was supply chain disruptions, there was monetary stimulus, and there was fiscal stimulus, and these all contributed. And in fact, the studies that I've seen kind of suggest that they contributed fairly equal amounts, actually. But the supply chain disruption is kind of a key one because you would not get the supply chain disruption without the increased demand, right? If demand had gone down, then the supply chain disruption would not have been as big of a deal because there would have been enough supply for the decreased demand. But because we basically prevented demand from being disrupted, demand stayed high, and then that put pressure on the supply side, and then that led to supply disruptions. Okay. Do painful rising prices for which the Federal Reserve alone is at fault result in higher profits? Not really, for several reasons. First, while consumers understandably focus on consumer prices, input prices, and in particular the prices of capital inputs, rise during inflationary periods as well. Second, not all prices in an economy rise at the same time. Lags between increases in consumer, producer, and capital goods prices make the calculation of profits at a given moment subject to distortions owing to injection, read Cantillon effects. So basically what he's saying is that when you get inflation like this, there are some industries where the increases happen first and then they happen a little bit later on. And so there are going to be places where a company, they bought a certain commodity at a lower price, and now all of a sudden it is worth more, and that results in corporate profits. So in this situation that we're seeing where you get, monetary and fiscal policy caused inflation, you will see increased profits, at least temporarily. It's additionally worth noting that businesses can and do at times make higher profits without raising the prices of final goods on markets, and that inventory gains can increase profits during inflationary periods. It's also worth noting the vast difference between nominal profits, which do not account for inflation, and real profits, which do. The former are largely ignored in the breathless attempts to blame private firms rather than Fed policy for rapidly dwindling purchasing power. Anyways, I don't know if I would really need to read the rest of it, but you understand the argument. I think that it really kills all of these people that say that it's all of the sudden companies got greedy. I think one of the weird things is when I argue with people about this is that they eventually come down to that it is monetary inflation, but just trying to describe it in a different way. They want to try and describe it in a way that makes businesses look bad. But like when we're actually talking like we have a system here, here's an economy, and then you make one change and then you get inflation, or you make a bunch of different changes and you get inflation. What were those changes that made the inflation happen? It's not that we increased the amount of greed in corporations. That's silly. Something changed, and it was that we injected monetary and fiscal stimulus into the economy. Too much monetary and fiscal stimulus into the economy. Because I think that stimulus was appropriate after the COVID pandemic, but we did too much. Too much. It's like arguing the wage gap myth. If companies genuinely paid women 30% less than men simply for being women, companies wouldn't hire men because women would be cheaper. Well, they kind of are doing that now, though, aren't they? Yeah, it's a good argument, and you're right. But I've always thought that over the past few years, I've started to find that one a little bit funny, because what is happening in the economy now is that women are doing better than men. Women are getting hired more than men. So, but the wage gap is, yeah, it's overcorrection. The wage gap is caused primarily by women's choices and not employers' choices. Yes. I don't like the... You notice that I often just don't like the language that people use. Because I think that a lot of the time that the language is chosen for political reasons and not for conciseness or for, like, creating a framework of words that helps people understand and leads people to the truth, you know? There is a gender wage gap, but the cause of the wage gap is the economic choices that women make and not the choices that employers make. As an employer who hires only women, women are their own worst enemy in the workforce. I don't know if I want to touch that one, but I think I'm going to. Well, so I'm not going to... In some fields, women are getting paid better than men now, actually, yes. And generally speaking, I have to be really... Because we're using really general language, and probably we should be going back and like looking at specific economic metrics and pointing out the metrics that kind of show how men and women are doing relative to each other. But women that do not get married and do not have children are getting paid really well. Basically, my generation and younger generations, if they don't have children, they're getting paid very well. So, point of control shift on ZB. Possible treasuries are ready to continue. I don't know. They didn't settle there at the top, that's for sure. They kind of bounced off of the open, didn't they? The only issue is that there was kind of like steady selling all the way up, and now it's flat. So I don't know if I can make any kind of read about what it's going to do next. Yeah, so here's what I think happens. Seth's hot take, okay? I think that people are a combination of both nurture and nature. There are things that we come into the world. We have certain predispositions based on our genetics, based on the predispositions of people in general. But then that's you then at the beginning. And from there, your mind is this kind of growing thing that grows and develops in response to the environment that it's in response to the stimulus that it gets. And one of the things that you will see over and over and over again is that the people that are in the trenches and working hard and having to struggle and really think to get through in life, that benefits them, that they're more intelligent, they make better decisions, they understand things better because they had to struggle. And when you don't have to struggle, you don't do those things. And in particular, one of the functions that happens in society that is very, very key in this process is the feedback that you get from peers. That you go in and you do something, and then other people don't like it, and so they tell you, and they say, well, when you did this, that was kind of a dumb decision, right? Like if I come in and I take a trade and that was wrong, and my understanding of the market that was wrong, I expect my stream to come in and say, yeah, that wasn't a very good trade set, that you totally misunderstood this, and here's where you were wrong. And then it's contingent on me to understand that, incorporate that experience into my mental model so that I can do better in the future. That's a really important part of becoming the best that you can be. And I think that in society, we have largely created an environment where women aren't criticized. And so they never get that feedback. And it prevents them from becoming the best that they can be. And that's particularly true in like the business environments, and especially in a small business, where you can have situations where women, both employees and managers that are women, can, they don't necessarily have the experience or like even the mentorship of people telling them how to do these sorts of things. And then everybody's afraid to criticize it. And so they never get better. And I do think that you are seeing that in some industries. Yeah. Why would you criticize women? That's sexist. I mean, there's no better place to see this effect than in Hollywood right now, right? Because we basically went through on like 10 years of trying to inject more women into superhero movies, which I'm not necessarily opposed to, because I mean, like, a guy likes to see a good-looking girl in a superhero movie, okay? But the way that they did it was stupid, frankly. The way that they did it basically like insulted their main audience and kind of injected something that the audience wasn't interested in, right? And they continue to lose money, movie after movie after movie, and make really poor movies, movie after. Like this Madam Web one is like crazy. I've never seen a movie get panned so universally. It's really quite crazy. And why is that? Well, there's people that out there that have been criticizing, but generally the industry has been very insular. Like, you can't criticize this, that makes you sexist. And so what happened? They didn't learn. They just kept making the same mistakes. And who loses out in the long run? It's the women, because you are stealing the opportunity to grow from it. Yeah, it's because of the way that they did it. I think that's a major factor. I think the reality is that if you are making a movie, that you will probably make more money if you have both male and female characters. If I say men and women characters, that kind of sounds weird. You will probably make more money if you have good, strong characters that are both male and female that audiences like. Like Ant-Man and the Wasp was probably the best example of that one, right? I didn't feel like that they really had to like totally destroy the Ant-Man character to include the Wasp character. I think that people want to see the men and women working together and bringing out the best in each other, rather than one has to outshine the other, which is a really weird thing. But again, this is also kind of Well, look at the people that are making the movies and everything. They're probably doing that because that's probably their experience is they didn't get married. They stayed in the industry and worked. And so they don't have those experiences of, oh, the way that you become the best is actually having a closer relationship with somebody of the other gender. That really is the truth. Let me tell you something. There's a lot of research. There's this book. I forget what the name of this book is, but there's a book that goes all into this research. But it basically shows that, like, when you get married, that your income increases. And that it's not just that, like, the people that are doing well are the ones that tend to get married. Like, they kind of, what is the word? They adjust for all of those different changes. And it still shows that, like, being in the relationship and being married just makes you better at everything. It's crazy. I think that there's probably, like, no simpler thing you can do to improve your situation economically than to get married to the right person. I mean, there's some big downsides to getting married. There are. But in the long run, it's better for you. And we'll see, because we got a whole generation of people that, like me, just never get married. They're all self-inserts. I think so. Look at Lucasfilms. Like, so here's what I heard. Do you want to hear the rumor mill about Lucasfilms? I haven't watched anything about it recently, but I've seen too much about this particular subject. The rumor is that Kathleen Kennedy has essentially a "you cannot fire me" clause. That basically part of Disney buying Lucasfilm was that they could not fire the person that George Lucas left in charge. So because he left Kathleen Kennedy in charge, they, like, literally cannot fire her, or at least for a certain number of years or something like that. So what happens is she makes a bunch of really dumb decisions. She basically has destroyed every franchise that they had, and nothing changes, right? Like, failure can be a good thing if you learn from it and you become better in the future, because fat tails are everywhere, right? You only have to have a major, like, one big major success, and it can make up for all of these losers, right? But if part of how you get that big success is having all of the losers and learning from it. And I really don't think that they are learning from it, because they keep doing the same thing, right? So if you're in a position like that, which I think would be really tough, I think that you kind of have to say, oh, people are not going to tell me what they probably should, and be cognizant of it. And I would hate to be in Kathleen Kennedy's situation, where it's like, I can't be fired, but I'm making mistakes, and I'm not having to face up or suffer any consequences from those mistakes. And I hope that she realizes that she did make mistakes and is trying to improve, but I don't know if that's what's happening over there. The showrunners openly despises. I think that's true too. But that's a different issue. That's a different issue, really. Star Wars is peak autism, in my opinion. Okay, what made Star Wars the thing it is autistic men. It is what it is. Okay, if you grew up in the 70s and you were kind of a little autistic, you probably like Star Wars. And if you grew up in the time that I grew up, like in the 90s, you probably read Star Wars books. That's just the way it's an autistic thing. And what they did was they basically, instead of saying, okay, So we need to find some creatives that are a little bit autistic and kind of understand why people liked this in the first place, etc., etc., etc. No, that's not what they did. They gave it to the popular kids. They gave it to the popular kids and the actors that never understood or liked it. And then thus completely misunderstood why it was popular in the first place and ruined it. Yeah, they did. 100%. Different issue, but two issues happening at the same time. Yes. It's funny where this conversation has gone, because how did this start? Is it kind of started about some of the economic fallacies that people make and the funny arguments that people make to try and cover for them when the data is very clear about what happened, right? This is very clear that both fiscal, monetary stimulus, as well as supply chain disruptions all contributed to inflation in the post-2020 COVID environment. And we continue to see fiscal stimulus, and that is kind of preventing core inflation from returning back to where it should be. It would be my argument. And the arguments that people make to try and cover for that are just crazy. Because it just doesn't align with what they want politically, I guess. Politically, they want more government power, more money spent, more yada, 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 yada. Just made me think of the Henry Cavill thing. He's a total nerd and wanted source-accurate show and acting, and the producers wanted sex, anger, and drama in the nerd community. Is very, oh yeah, that The Witcher show, that one is crazy. Like, how you can have that situation and then allow it to go the way that it did is just insane to me. But it kind of seems to me that Henry Cavill was not given the respect that he deserves. They were probably like, you know what, the only reason that you're famous is because of Superman, and that wasn't even a good movie. So like, what have you been in that was actually good? We're not going to listen to you. That's probably how that conversation went. That's why I stay off of Reddit. Well, okay, so we've kind of brought this up a couple of times this week, but I don't think that I ever really kind of put the thing. Part of it is like, I'll go online and I'll argue about things, and part of it is that like, I think I've just been doing it for so long and it's so much habit that I just kind of can't help it. And I often will find myself writing something out and spending 30 minutes writing something out and then saying, you know what? The only person that's going to probably read this is the person that I'm arguing with, and they're an idiot that it really isn't worth engaging with anyways, so why am I wasting my time? I do that every day. But I think that there's another driver behind it, and that is that I believe that discourse on the internet has gone awry. That essentially what has happened is one side has decided that they're going to try and drive out anybody that disagrees with them from the communities. So if you're talking on Reddit, you're like not allowed to post a conservative, opinion anywhere. Like, let me show you this comment that I had. Because I told these guys, oh, this is the reason I got banned from this one website because of this thing. And the guy was like, well, no, you got banned because it's a right-wing propaganda think tank. And I said, well, okay. I don't see anyone complaining when people post trash from left-wing propaganda think tanks or left-wing editorial sources. Not that there's any rules about what sources are appropriate in the subreddit rules. If it's bad information, then argue with logic and evidence. Use the downvote button. But you only ban people and delete the posts when there were no rule violations and no warnings, unless you're trying to control what people say. And you're trying to control the narrative. You notice that? Like, what is with that in Reddit? Because the whole thing in Reddit is people post stuff, and then the stuff that people like, those get upvoted and float to the top. So if it's like content that is within the sub rules is not spam, but you just don't like it, you don't ban it. You just let the community of what's supposed to be, what they like, right? Then he says it doesn't reference verifiable facts. Did you even read it? And so I went into the whole thing. I was like, well, it does. Here's the verifiable facts that he cited, right? This is what you said, that it doesn't reference verifiable facts. It's just objectively false. Okay. So that's just, all of that was just to give you kind of the color of the conversation that I was having with this guy, right? And he has this thing at the bottom. He says, since you fell for this dumb shit of an article, I assume you're probably pretty conservative. Have you ever thought about why all the small towns are dying up and disappearing? Why no one who has any sort of future prospects ever sticks around those towns? Why there used to be some small grocery stores ran by locals but closed a while ago when the Walmart opened up. But once they closed that Walmart, and now you have to drive 2 towns over to get groceries. And now, because you spend your money at Walmart, all that money disappears from the local economy and congregates in the city centers instead of the locally owned stores where profits would mostly get reinvested by the local economy. But darn you saved 20 cents on veggies. You're really showing those libtards. Yeah, Uzi says, this is hurting my brain. Just listening to Redditors is pain. Why is he bringing this up? It has absolutely nothing to do with the conversation, which was inflation in that particular article. And he's bringing up something completely unrelated that is basically, oh man, I really hate conservatives. And the reason I really hate conservatives is because they're okay with Walmart and I'm not. Okay, it's an interesting thing. It's a thing that's happening. It is like, there's a lot of towns where it's like the town that has the Walmart, that's the one that keeps going, but then like the jobs in the town are just Walmart and they really suck. It is a thing. I'm not going to argue if it's good or bad, but it is happening, but it has nothing to do with what we're talking about. So then, I went through and I responded to his post, and I said, yeah, you're changing the subject. The impact that large corporations like Walmart has on small towns is interesting, but it proves nothing about what is driving post-2020 inflation. Don't waste my time unless you're going to reply with real logical arguments, right? And so he responded to me. He said, you mean, wah, I only care about the things that agree with me, not the facts. Don't hurt my little snowflake feelings. Who was it again that was president when the god-awful PPP loans were signed? So, like, he is not arguing the subject. He is arguing with some sort of characterization of a conservative in his head instead of actually, arguing with me and arguing with the arguments that I'm making and the things that I'm saying. He's going off into left field and arguing other subjects that trigger him that have absolutely nothing to do with what we're talking about. And you can just feel the disdain that he has for those what do you call them? Those rednecks that live out in the boonies and are in dying towns. I hope that those towns die so that you all have to go and be forced to live in the city. It's just like totally, what the F? Probably not. Because number one, they're arguing. So if they're arguing with you, they're much more likely to be a man. And they're on Reddit. So if they're on Reddit, they're much more likely to be a man. I don't know. I don't know if the statistics that I would have would be very good at predicting whether they're a man or a woman in this particular instance. But if I had to guess, I would guess that it's a man. But my gosh. It really is like crazy. Buy absorption at 16.5 is nuts, 13k net. Oh, I didn't catch that. Well, at 16.5, there is 19,000 contracts traded. So a lot of it was that absorption. That's interesting. Doesn't really give us a very, that just kind of says to me that our opportunities for a good trade are even less right now. A man, probably an autistic one, probably brags about his ADHD as a superpower. Doesn't bathe all that up and learn to shave at 22. Smells. You know, so can I shift to talking about autism? This is a subject that I'm really interested in because I'm pretty sure that my 3-year-old, or almost 4. No, he is 4 now. My 4-year-old son is autistic. He's 4, still doesn't talk. He can kind of communicate. He can babble. Yesterday, he came up to me. He took his binky out of his mouth and started saying stuff and pointing to his mouth, which I'm pretty sure means he's hungry. But he can't actually use words. He's autistic. So it interests me, and it interests me that there's kind of like these levels of autism. That like there's autism that can be completely debilitating and basically means that if he's a level 2, level 3 autism, he will probably be dependent on me for the rest of his life. Possibly. And I'm to the point where I am kind of like trying to save extra to plan for that potential possibility. And then maybe it also conflicts with some of my plans, because what I would like to do is go and move into a really nice neighborhood up in the mountains next to a ski resort. And but if he has to go to like an autistic school or something like that, and it's really far away, then it's not going to work, right? So that might change some things, right? But then there's this other group of people that are like level 1 autistic, where it's like a lot of them don't even get diagnosed with it until they're adults, and they say, my life is really hard and I seem to be having a lot of problems. Like maybe there actually is something wrong with me, and then they find out, oh, actually, yes, I'm autistic, right? Okay, well, so for those like level 1 autistic people, and it kind of bothers me, like we used to call them Asperger's, but they got rid of that because the Asperger's guy was a Nazi or something like that. But I kind of wish that they were called different things to differentiate between the people that they have autism and it's completely debilitating to them versus the people that, it's not debilitating, but it is something that you can treat and they can live relatively normal lives. And there's like varying degrees of it, right? Okay, so the thing I find interesting about that group of people is that they do have a deficiency. Okay, there is a thing in their brains that it does not work as well as it works in regular people, and it's basically resulting in different brain structures. And it essentially, as I understand it, a lot of the executive functioning brain structures just don't grow properly, and so they, like with ADHD, I think of it as like extreme ADHD. Or at least those are, they're often comorbid because they're related sort of things. ADHD is just like the chemical deficiency, but then when it starts affecting how your brain grows and develops to where it just like straight up doesn't develop correctly, then that's autism. The deficiency kind of prevents them from understanding what their deficiency is. That's what I've noticed. And I think it's the same thing with ADHD people too. That somebody with ADHD, it kind of prevents them from understanding what is wrong with them, because it's basically like broken executive functioning. Like most people, they can come into a situation and then their mind starts doing all of these things automatically. It says, here's the situation. I'm going to put this into this neural network that I've built up over time about what I should do in this situation. And an answer immediately comes out. And then I go and I wait to act until that has happened. That's the way that a normal person works, right? Person with autism, that network is broken, so they can't use that one. They have to go and use logic, and then they have to like manually go in and say, okay, what is the situation where it's like, here's my little workflow that I have. What am I actually supposed to do in this situation? Like, what is the social context, right? And that's why you run into all these things where it's like a normal person understands quite immediately what the context is and what somebody's doing, and the autistic person doesn't. This is because they don't have that neural network, that executive functioning higher level neural network does not work at the same, right? And so, there are different kinds of, different modes of thinking that work well for different kinds of problems. If you are doing like engineering and I think to some extent trading, then having to go through those logical processes is like really, really beneficial, right? But like talking to people, that's not fast enough. You can't do that kind of thinking fast enough to respond to social situations. And if you can't, if you don't really have a lot of experience in using that network, it kind of atrophies, and it also means that you don't understand it. So then you can't understand the way that other people are thinking. They literally cannot see that, oh, normal person, the answer just comes out, and they don't even really understand how they got the answer, but that's the way that like a machine learning neural network kind of works. And that's really, really interesting to me. And yes, I don't think that that's this particular person, but that's a lot of people on Reddit. And yes, something else that I'm seeing, I'm not going to say that I think that there are more autistic people on the left than there are autistic people on the right. I think that, contrary to many things that we say, that probably the most significant factor in whether you're conservative or liberal is your upbringing. Okay. But what I have found is that the autistic people on the left have been able to dominate the conversation a lot more. There's a lot of autistic and ADHD people on the internet, and they love to talk on the internet. I love to talk on the internet. I'm not going to say that I'm autistic, but I'm ADHD, and I'm kind of more in that vein, and I love to comment on the internet. And so there's all these people commenting on the internet, and you don't realize how much more likely you are to be arguing with somebody that's basically autistic. Especially if you don't really understand autism and understand the signs and how it works and all of those sorts of things. Like one of the things that's scary to me, being a parent with a child that I believe is level 2 or level 3 autistic, is seeing all of these stories of people. So like one that I can remember was like, there was this movie that they would make us watch in school called like Sniper in the Snow, I think is what it called. Which, Sniper in the Snow, because to me a sniper is a guy with a gun shooting people, but that's not what it was about. It was about a kid that was kind of ignored and shunned by the other kids, and eventually he was so sad that he just collapsed in the snow and died. And then everybody felt bad about it, right? And when I think back on that show, I'm like, oh, he was autistic, right? He was probably autistic, and nobody caught it or realized it. And so he didn't get the support that he needed. Some of these stories, like if you, stories of, I don't know if this is Emily Rose or like other related stories, but like there's been stories of like kids that have like had demons exorcised from them like literally hundreds of times, right? Okay, that's not somebody that's possessed. That's a severely autistic child. That's a severely autistic child who grew up with a poor environment, and so they have now learned poor, destructive behaviors, and it's very, very difficult for them to build new neural structures and to modify their behavior and improve, and so they just continue to act like wild. My son, he likes to talk with like a froggy kind of voice all the time. It's like an autistic thing. I don't know why they do that, but it happens all the time. And I'm concerned that like he'll be at church and he'll be talking to his teachers in that voice and thinks that he's just being silly and that some old person will think that he's possessed or something. Like it's because I've seen it like that happen. So nobody understands. They don't see it. What is this book? Of Mice and Men? The Book of Mice and Men? Right? And there's the two brothers and the younger brother is like this really, really big guy, but he's super stupid, right? Autistic. Guy is clearly autistic. Makes the story really, really sad now when you realize he's an autistic person that didn't get the help that he would have needed. It's everywhere. And it's, as a parent, it's terrifying to be like, their vast majority of people will not understand. We'll just assume that he's a normal person and judge him as such and treat him poorly as a result of that. And I'm sure that at some point that he will be mistreated by peers, harmed, things like that. It's just, ugh. And meanwhile, we're just like throwing them to the wolves. Oh, okay, go and comment on the internet and drive the internet crazy. Well, it's not like we can like ban autistic people from commenting on the internet, but I kind of wish that more people understood that. Maybe that. So what was another experience? So there's autistic people on the internet. There's kids. So I had this. I think I told you guys this story already, but I had this one conversation with somebody where I was like, okay. Like, this is what we kind of know. This is what the data says about trading. And they're like, well, that's not true. I know because I have this profitable strategy that I'm using. And I'm like, it's probably not actually profitable. Just based on what you've told me already, I bet you that you're probably just being fooled by randomness. And if I back tested it, I could show you why it's not actually what you think it is. And they're like, okay, sure, here it is. It's this, this, and this. But you wouldn't be able to duplicate this one part because it's like an indicator that my dad wrote. Oh. So you're like 15 or 16 years old and I'm talking to a child. And that's why I'm getting these responses that I'm kind of like, why are you so dense? The internet is run by autism and children. It is, to me, it has basically gotten to the point. When I was a kid, I was of the persuasion that you shouldn't play video games that were violent. Like my friends, I had some friends that really liked to play Mortal Kombat. And I wasn't into that because it was like blood and guts and like gore for the sake of gore. And I didn't think that that was the sort of thing that you should be playing, especially not as a kid. Right? But in my older years, I have gotten to the point where I actively seek out the most violent, sex-fueled video games I can. Not because I enjoy that kind of content. I still kind of dislike it. But because there's going to be less kids there. Because I really feel that, like, they talk about video gaming is really toxic. Like League of Legends is a really toxic community. You know why? It's because it's mostly kids. And yes, is it affecting our politics? It is, in a very negative way. If it was only 30 and 40, like if there was some law, if there was some law that you could only comment on the internet if you were over the age of 35, okay, things would be different. I'm not saying that we should do that, but I'm just saying things would be different, okay? And probably better. Probably better. I think that a 35-year-old can have a more respectful and productive conversation. But like, why is the internet so toxic? Why do you get this sort of stuff? Because it's mostly kids and autistic people. A lot of people and kids are never right or never know anything at all. They never get to speak up or be heard, so they yell and scream online to make sure that they're heard, and they're always right. I mean, I think that people in general tend to believe that they're always right. You know? I mean, for me, on the subjects that I don't feel confident about, I don't argue with people on them, right? there's also this other issue, which is like the normie way of thinking kind of also causes a little bit of problems, because people are extremely susceptible to like social proof biases. Basically, we are kind of wired to want to go with the group, and that really leads to like there's a certain way of thinking. And if somebody thinks a different way, there's, you know, maybe they're not from my tribe, essentially. So just you kind of going left field and having a different way of thinking is like a huge turnoff for a certain group of people. I often have this difficulty where it's like, okay, we're doing a certain, like, analyzing a certain thing. And you'll get people that they're using that executive functioning brain and all of their heuristics and everything. And they have some sort of a vision about the way that something should work in their head, and they're trying to just go through that as quickly as possible, right? Whereas me, I tend not to use that, and I try and go from the ground up. And so I try kind of say, okay, so what are the different things that this system should do, and what are the various inputs that we have available to us? And then how do we translate between the two of those so that the inputs that we get result in the outputs that we want? And going down from the beginning. And then, you know, if you're doing that with somebody else that wants to just jump through their heuristics, it's frustrating for all of us. But usually I'm able to work it out. And it's all good. If the 99% are doing it, do it another way obviously isn't working. If it's trading. See, this is I think one of the, like, if you want to really get down to what are the problems that we have in modern society, or let's say the Western world, I think one of the biggest, like, foundational problems that we have is that our society is based on competition, and we have a nature that is kind of not competitive. That the default modes of thinking and the default biases that people have do not work in competitive environments. Right. So a person's natural inclination is to find somebody that's having success and then do it the way that they're doing it. That's the way that the human brain works. But in a competitive environment, that doesn't work. In a competitive environment, you have to be able to do it better than the other person. So why do it the same way as other people are doing it? Why not start from scratch and come up with your own system so that you can make a system that's better? Right? And you go and you do the work, and so you get better at doing the work. That's another thing. Do the work, you get better at doing the work, more likely to come up with a good system in the end, instead of taking all the shortcuts. But that's not the way that people work. So you end up with all of these people. They go and they watch whoever it is that seems to be doing well in trading. That person tends to be somebody that's taking on excessive risk, and like, basically their profits come from risk premium and they don't understand it. The person that's trading doesn't understand that's where their profits are from. The person that's watching them definitely doesn't understand where their profits are from. And so you get this mass of retail traders all going down and doing the same thing over and over again and failing. And then we're like, why is it that 95% of retail traders fail? Because just based on the system, most people would fail, but not 95%. But it's because our human biases and the way that the community and the system is set up right now that everybody ends up being led down the same bad path. So it's like you're walking down a road and there's this little side road that goes down into this dark forest with, you know, spines and stuff everywhere, and everybody comes there and is like, oh, let's walk down this road because that's what everybody else did. Do you think that learning statistics improves one way of trading? Yes, to an extent. I think that the understanding of fat tails and the issues associated with fat tails is very important to understand as a trader, because the vast majority of the mistakes that retail traders make are premised or come because of a premise based on a Gaussian market, and the market's not Gaussian. I even have relatively big people. So there was one influencer I was talking to, and they were talking about a scaling out strategy. And I was like, well, the scaling out strategy alone doesn't do anything in terms of like your end profitability. What it does is it just kind of changes the distribution. So it's like, if you have a distribution like this, right? And this is the center, then if these are exactly mirrored, if these are all winners and these are all losers, then your net is 0, right? You can come in and you can change the kurtosis of the strategy so that it looks more like this, right? But you didn't actually change the skew, right? You didn't actually make it, like, in order for you to change this into something that's a profitable strategy, I need a distribution that's like more like this. That would be the optimal thing. Is like, you know, I catch all of these really big winners that are way bigger than anything that I got on the left side, right? But coming in and like changing how you like scaling in and scaling out doesn't do this. Doesn't do this. It does this, right? So I was trying to explain that to somebody. I was like, look, here's like the scenarios for each contract. Here's how much you could potentially make or lose with this strategy. And based on a random market, here are the probabilities of each of those things happening. And so when you game it out, in the end, it doesn't increase your end expectancy. It's still going to be if the strategy or the entry and exit signals are random and have no positive expectancy, changing your risk management strategy in terms of scaling in and scaling out does not change your end expectancy. And they said, well, yeah, except for that most of my traders beat those numbers. The percentages that you have in there on what would be break even, well, most of my traders beat those. Well, they probably do now, but that's because it doesn't come back into balance until you see the fat tail. And then what happens is you see that when the fat tail happens, you say, well, I don't count those in the percentages, those outliers, because that was when he was having mental problems and wasn't actually trading the strategy anymore. So they don't count them. So they never actually get to see that actually, like, it does even out in the end. It's just, it doesn't even out until you include the fat tails. Here's what most traders are doing. Let me tell you something. You have a distribution. Okay. This would be like the distribution of a momentum strategy that's like break even or something, right? Actually, let's do it like this. Let's make it one that's profitable. Okay. Because you have a far right tail. You want something where there's lots of losers. Oops, why did it do that? There's lots of losers, so you have more losers than winners, but the winners are much larger than your losers, and the tail is much longer as well. Okay, that would kind of be like an ideal momentum strategy setup, right? But here's what retail traders do: is they say, we're intraday trading, and my winner is going to be larger than my loser. Then what you're doing is you're basically lopping it like this, and you're making the distribution like that, right? And then what happens is you only see these. If you're only looking at this section of it, and you say, look, see, I'm winning more than I'm losing, so it all works out. Well, the problem is that there's still this tail that they're not seeing, that they don't factor in, and they don't see it for like a year. So then it takes them a year to figure out that actually it's not profitable. That's what most retail traders do. If there's the most important thing for a retail trader to know, a beginning retail trader to know, is looking at the distribution of daily returns and looking at the statistics and pointing out to them that there are these tails, and the amount of money that you make on that tail can completely eclipse everything else. Which means that the real determining factor as to whether or not you make money will be how you deal with those tails. And if you have a strategy that's like, yeah, I win most of the time, but I have a really far left tail, which is what happens when you come in and say, my target is much closer than my stop. That's what you're doing. So you're taking it from this, from a normal Gaussian distribution, and you're kind of like, you're like taking your fingers and like pushing it over this way so that it turns into this top diagram, right? That's what you're doing. And when you do that, it squishes this tail out and makes this left tail longer. So it's not a profitable strategy, but it takes longer for you to find out that it's not profitable. And by that point, you're already 2 years in. So when you see the far left tail after completely believing in this strategy dogmatically for like 2 years, what are the chances that you're going to realize that the strategy is just flawed at the end of 2 years? You're not. They don't. They never do. They're always in denial. And they keep trying to do it over and over and over again until they run out of emotional capital and quit. So yes, knowing the statistics can very much improve your chances of having success in trading. Probably you'll still lose, but at least you stand a chance. Okay, we're gonna get the PMI in a minute here. It's a really interesting question, which is like, would you rather have struggle every step of the way and feel like you're a complete failure every step of the way, but in the end make money? Or would you rather, think that you're God and make money and think that you're doing pretty good at points, but then in the end lose it all? Which person would you rather be? Because basically what happens is most people choose to be the second person. Most people choose to, I make money every day, but then every 2 years I blow the account. All right, well, they're pulling quite a bit for this S&P PMIs, so let's see how they react here. Okay, well, do you see that big old order at 17? It's going to be interesting to see if they get below that. Okay, well, the composite was 51.4 versus 51.8, so it's a little bit lower than expected. Manufacturing 51.5 versus 50.7. Oh, that's not good. That's interesting. So manufacturing was higher than expected. Services was 51.3 versus 52.3. So services was worse than expected. Manufacturing was better than expected, and composite was worse than expected. So I guess the market decided that net overall that was weaker economy than expected, and so treasuries can move up. But there's a lot of nuance in that number. And I do believe that there are like reports with cross traps. So this may like continue to evolve as they try to understand the report. But so far, that's resulted. I mean, we were kind of up. We had that jobless claims and we shot down it, but then we were higher than that before this news, and then this news happened and we really jumped up. So still within the overnight range, and quite a far cry from like where we were yesterday. So it looks to me like the overnight high is 24. So let's see if they bust through that and we see a little bit of a stop run. Could be fun. Could be fun. S&P 500 seems to be liking it too. If the market were random, would it be statistically possible to make money only by using risk/money management? Maybe. I would say that if the market is like really, truly Gaussian, I would think no. But I think the reality is that the market is not perfectly Gaussian, and some of those statistical deviations from a Gaussian market make things harder, not easier. You know, like if it was a Gaussian market, it would be just like this. Like if the market was just like this, that would be great. I mean, that would be okay for trading at least, but it's not. It's more like this with like super long tails. Try and make these so you can compare them to each other. There's longer tails. The longer tails makes the market harder to trade because, you know, these things are devastating. These things will just wipe you out. That's what happens to a lot of retail traders, is that they're sized up so high that, yeah, they're making money and they're like pulling money out on the combine accounts and stuff, but then 2020 comes along and they get wiped out. Like, notice this next time you're on Reddit or whatever, you're talking to other traders. How many of those people that you're talking to were trading before 2020? Not many. And you know why? Because when it started, the treasury yields went up so high, and all of those guys that were doing those kinds of strategies just got absolutely destroyed, and they stopped trading. And I saw it here. There was a group of people that were very active on the Discord and talking a lot, and then COVID hit. And after COVID, it was a different group of people. I mean, there's still a core. There's still a core bit of traders that have been around for a while, kind of know what's going on. But like the new people, they kind of shifted. And that's in a community where I do everything that I can to try and help people understand this. And then we still fall victim to it, you know? It's pretty wild. Guy Man says, hello, how are you? So we do have existing home sales at the top of the hour. I don't know if the treasuries are going to react as strongly to that as they did to this. I would say that was a pretty strong reaction to the S&P PMIs. But perhaps that is just because there wasn't a whole lot of other data this week. Want to be like really close, but then I get like this shadow on my face. Yeah. Okay. So there is Fed's Jefferson speaking at the top of the hour. The market has been pretty interested in what he has to say. He's one of the newer ones. He is more liberal. So his tendency as of late has been to kind of talk things up and be a little bit dovish. So that's probably not a good sign for my position, but you know, I haven't seen anything that is significant enough for me to change my view of things, so I'm still going to stay short for hopefully a couple of weeks here. But we'll see. But that's coming up. So we got that and the sales number at the top of the hour. So still some action to come, I think. I don't know why I pulled up the Reddit tab is like, okay, let's look at other stuff to talk about, but I pulled up Reddit. I couldn't help it. And now the thread I'm reading is from FPS Aim Trainer. This is the subreddit for Kovacs Aim Trainer. I just want to quit FPS games with forced crossplay. Why? Just why I practice every day and put a ton of hours on aim training and playing games like Call of Duty or Apex, while some kid can literally poop on me with a controller with zero effort and zero aim or skill required to kill me. Why do I have to battle a AI with inhuman reaction and player to play a game I like? Just why? Okay, maybe the English isn't his first language, or maybe he's a kid. I don't know. There's very, very poor grammar. But you know what? I agree with you. I despise crossplay in first-person shooters. To the point that I just won't play a game if it has the crossplay. And the first response was, send a letter to Activision and tell them about your woes. Yeah. Oh, that's funny. Join the tactical SPS side of the... No. Counter-Strike is boring. It is like the best thing available right now, but I'm not into it. Have you played this new game, Helldivers? That's a fun game. That's a fun game. What video you want to... I want to play Unreal Tournament 5. I'm sitting here. This is what I've been reduced to in my old age, is hoping and praying that Epic Games decides to make Unreal Tournament 5, essentially. Like Unreal Tournament 5 integrated into Fortnite or something like that. That's my only hope, to have true joy playing video games again, I think. Otherwise, I can just play the old Unreal Tournament against bots, I guess. Can play it online, but it's not really... I don't think it's very fun online anymore because it's too exploitable now. Daniel, I gave up on that stuff when they canceled UT4. Yep. Yep. That's where I was, but then it was like, okay, it's dead. What can we do? We can play Apex Legends? Okay. And then they add cross-platform play with controller users that have auto aim. Ugh. Right? So it's like, there's nowhere to go. There's nowhere to go. You can play Brood War. Brood War is still fun to play. And is still ladderable too if you're really willing to put in the work for that, but it's not a shooter. It's a different kind of game, but like that's kind of like the way things are going. But Helldivers. So Helldivers is not a competitive game, so it doesn't really scratch the itch. But at the very least, you get a developer that actually understands what they're doing. Like they understand what a cooperative looter shooter should be like, and it's not free to play, but it does have in-game transactions. They're not exploitative, but it does have in-game transactions. And all of the decisions that they make, I think, are decisions that are good for the player and good for the community. So, like, that's the place to be right now, I think, is Helldivers, even though it's not a competitive game. Why did you leave? I got laid off. Yeah. I hate to say it like that, but I got laid off. Was kind of turned into, so first of all, they're always kind of culling the bottom, right? But they're always having like layoffs. They do layoffs frequently. I survived through like 5 or 6 layoffs actually. But at that particular time, the projects that I had been put on and things like that didn't really give me a very good position. So, yeah. No, I didn't over leverage derivatives or anything like that. Yeah, I was just in technology. So like the project that I had been working on at that time was updating their monitoring systems that tracked how much latency there was between all of the different trading systems. We had a couple of little false starts and mistakes with it, but we got there. I got it and fixed it. But then like that project was done. And what's the next thing that I'm going to work on? Well, they're doing layoffs. So like, who do you think's the first person that's going to go? Right. And I felt like that I had kind of been put into that position by somebody else that, you know, didn't really like me for whatever reason, you know, so they didn't really put me in the places where I would have had the most impact and done the best. But that was fine because then I went and I worked other places and I just continued to excel. It just is like really wild to me. This is like, you feel like that to come in and have real success in your career, that it's like you really need to be grinding hard and like doing all of the crazy, you know, like excelling at everything all the time and competitive and all of that sort of stuff. But really, it's just kind of been, I just try and do what I can in that moment, and it ends up turning out great most of the time. And you get better at it as you go along, and a lot of it was just, I guess I kind of got lucky that I kind of, you know, because of, so at Goldman Sachs, this was kind of a little bit of a, it ended up being a liability for me. I was always put on the things that were broken. Project after project after project, it was, this thing is broken, it's really important, but these guys aren't getting it to work, so now we're giving it to you guys. And I did that for 2 or 3 different systems, multiple times, right? But the problem when you do that is, number one, you finish things, so then they don't need you anymore, you know? And then number 2 is, like, what is the thing that you're doing that, like, if you're gone tomorrow, things won't work, per se, right? Because you're fixing stuff that's already not working, you know what I mean? So that kind of made me vulnerable to the layoffs. But after that, it turned into site reliability engineering. When something's broken, who's the people that we call for the stressful situation to figure out how to fix it, right? And now all of a sudden, you have a direct impact on the performance of the company. Here comes the top of the hour news. You know, how quickly we resolve this problem is hundreds of thousands of dollars, right? And now it's a net benefit to me. And you get the resume. So in the end, being laid off from Goldman Sachs, was disappointing, obviously, but probably one of the best things that could have happened to me. And I wouldn't be able to do this if I was still working there, right? The reality was that I was always primarily interested in trading and learning about the markets. And I had gotten to the point where I was in the company was actually holding me back from learning more about the markets. So it was a good thing that I got let go. You should have wiggled your way into your quant department. I don't think that would have ever happened, though. For starters, I would have needed to be in New York to do that, right? I probably could have gotten into a spot where, you know, the quants are coming up with the models and then I'm the one that's programming them and stuff. But the industry was still kind of developing at that time. So, and like I said, I wasn't in New York. I didn't know those guys. I didn't quite have that in. And the ins that I did have kind of ended up working against me again, right? Because one of the things that I did was I worked on the risk management systems that would like cut off a rogue trader, right? But then there was a guy that's what he did. He worked on the risk management systems and then he became a trader, and that was the London whale from JP Morgan that went awry, right? So then they were like, well, we don't want to give somebody like that actual trading access. So that was, so you know, the kind of the thing that I thought was a net benefit to me really, really ended up working against me in that situation too, you know? But it just goes back to what we were saying at the beginning of the stream, right? It's that you are, in a large part, a product of the experiences that you have. And if you don't have difficulties and you know, if everything always goes perfect for you, then you're not able to develop as far. And so while one could maybe argue that if I had stayed there, maybe I would have eventually have gone into the more professional world, I don't think that I would be as good at this stuff as I am today, because I was then forced to go in and learn everything the hard way myself. And I'm better for that. And I work hard and I have the resources available to me that I was going to be successful at something one way or the other anyways. And now I'm kind of to the point where you kind of have to say, okay, like, you need to not just base your entire life off of financial goals, because then when you achieve your financial goals, you know, existential dread overcomes you, right? That's why these people that become massively successful, they are more interested in just the work of it, right? Like to me, it's okay. I've kind of met most of my financial goals. I could just coast from here on out, right? But I don't know everything about markets that I want to know. I want to know what's involved in running a hedge fund. I want to know if some of these sorts of high frequency trading things that I'm seeing and that I'm hoping I can back test, if there really is there. Is there really a Markov system underlying the imbalance in the book? These sorts of things. So I keep grinding on. But every little bad thing that happened to me eventually worked out to my benefit, right? Like I really liked my boss at the time, and I kind of felt like there was more that he could have done, but it was fine. He understood. And he said, you know, like, usually getting laid off from Goldman is like the best thing that ever happens to you anyways. He was right. It's like immediately you get people that just are desperate to have you and they pay you way more. is exactly what happened. Like, I took a month off because there was like this class that they're going to take, like how to set your resume up, and with I tell you what, if you're ever into that sort of thing, Lee Hecht Harrison. So I always see these people on TikTok and stuff that are like, I've put in 100 different resumes and I haven't gotten back from anybody and things like that. I tell you what, man, if you have the money and you're really struggling, go to Lee Hecht Harrison and kind of do their kind of course and stuff, and they're so good. It's so good. I went in, I put my resume out, and I was hired within 3 days by somebody that really wanted me, and I stayed. They paid me very, very well, and I stayed there for, how long was it? From 2016 until 2022. So for 6 years, over 6 years. And then I only switched because somebody else recruited me extremely aggressively. So, right? It worked out to my benefit in the end. Can you explain your ideas about using Markov and why that approach specifically? Okay, so here's what I see. If you look at the book here in the 10-year treasury, and you take, like, let's just say the first 10 levels, right? And I add them all together. Actually, let me do it like this. I have more levels out there so that I can see stuff that's really far away. But if I just change my market depth so that I can only see the first 10 levels, okay, then I can see down at the bottom the sum of them. So the bids are 30,500 about right now. And the offers are about 29.5, 28, 29. Okay, so it's pretty close, but sometimes you will see imbalances that are bigger than that, okay? So like the sum of all of these versus the sum of all of these, okay? And I have an indicator in my speculator Seth indicator suite that kind of graphs these things for you with various types of filters. Like one of the ones that I have is kind of looks at, you know, there's always these guys stacking and pulling. So like what was the maximum that it ever was and what was the minimum that it ever was, and that can kind of tell you a little bit about how much liquidity is actually out there. And then you can compare the two sides to each other, okay? And what you will find is you'll have this situation where it's like there are more bids than there are offers. And so they move up. And you can go and you can do that trade and it like works every time. And then when it switches and the offers are greater than the bids, then you sell and it works every time. And it'll be like that for a month, a couple of days to a month. And then all of a sudden it does the opposite. Then all of a sudden it's like the bid is bigger, but they'll go down. They'll go towards the side that's larger. The offers are bigger. They'll go towards the offers. And it'll do that for a couple of days to a month, right? And it's like, it's so this or that, right? It's like, so if you're, yeah, the power meters will tell you that sort of thing too, yeah. I was just showing you the some numbers, you know, you can just see it on the dump. Okay, but it's really weird to me that it's kind of like I'd call it chunky, right? It's like this strategy works pretty much every time for a while, and then the opposite works every time for a while. If it was just if there was no relationship between the two of them, then it would just be random, right? But it doesn't seem to be random. It seems to be like that there's a market state and it switches. So that is why I think Markov system. So a Markov system is one where you say, we are in a certain state. I don't know what state we are in, but I can look at what state we were in the past, and I can look at the probability based on the factors that I know about that we've changed from one state to the other to kind of say the probability that we're in state A versus the probability that we're in state B, and then taking a trade. So I suspect that when it comes to the resting limit order market imbalance, that there is some sort of a hidden Markov system involved. And that with the saved historical level 2 data that I have now, that I can run a back test on that Markov system and understand what it is. And I saw some things when I worked for the bank that at least strongly suggested, I didn't understand what a Markov system was at the time, but I kind of think back on it and think, oh, I think they were using a Markov system. I think that their robot was in part using a Markov system to determine, you know, which way it was market making, essentially. So that's kind of why I want to do it. I was just thinking, I was reading back through your comments and I was thinking about that. Yeah, so I did get laid off from the bank in the end. But the other thing that I forgot about was that they gave me like 6 months severance and I didn't use any of it. So that helped, yeah. It's a significant factor behind being able to own the home that I do today. Man, when the more I think back on the house thing, it really was like a confluence of a lot of good decisions on my part and a lot of luck. I knew that I needed to get into a house, but a couple of, I don't know, I guess you make your own luck, perhaps. Because I was sitting there thinking every day, I gotta get into a house, I gotta get into a house. You've been digging into Markov as well. There probably is also some usefulness to, like, if I'm doing a momentum strategy. This is something that I hadn't even really considered yet, but using a Markov system as part of your momentum strategy, that seems like that would be something that could be a thing. And the people talking about Markovs, the first people that I ever heard talking about Markov models was Renaissance, when they were doing futures-based momentum strategies. So, yes, I need to dig into that more. My big problem, though, is that my dreams are always bigger than my focus. So I guess I didn't really have a ton of free time last weekend to do these sorts of things, but I did not get too deep into the technical stuff that I wanted to. I think of my next thing is I need to make a video. I really want to make a video about momentum, because I feel that one of the things that happens is, like, again, retail traders, they kind of get led down the wrong paths at the very beginning, I feel. One of the ways that they get led down the wrong path is that they're just not able to understand what being fooled by randomness is. They don't understand the statistics, and they don't understand the types of strategies that are fooled by randomness. And that all of these people that are sharing this stuff, they're sharing it because they've been fooled by randomness. But I think one of the other things that kind of leads people awry is that there's an extensive focus on technical analysis because of things like the Jack Swagger books and the Turtle Traders and things like that. And the problem with all of that is that those were not day trading strategies. So I want to make a video explaining how momentum strategies work and explaining why momentum strategies are not day trading strategies. And then going kind of a little bit more into, okay, so that might help explain why, or that might suggest that there might be some sort of momentum effects that you can use some forms of technical analysis to take advantage of, but that they're not likely to be very effective on intraday basis because your winners aren't allowed to ride long enough. You have to be able to hold overnight for your winners to really hold your winners long enough. So I want to make a video about that. That's the next thing that I think I have to do. That's the tomorrow and Friday and Saturday. I don't know if my wife works this weekend. She's been working quite a few of weekends in a row now. So I think this week I should get a break. And I should be able to take some time to write that at the very least. But also, hopefully, I get some time to work on my desk. So I really want to finish the desk and get myself some more desk space. And then I will hopefully find some time to work on my data crunching. Now, on that, I think the first project is I have something that I made. It works, that it listens to the microphone and transcribes everything that I say without using an external service. I have that. So I've got to get that working on my Kubernetes cluster. Hopefully I can get it to work with Kubernetes cluster. And hopefully, I think the way for me to do it is to use NDI. Like, I should, through OBS, should be able to send the audio out through NDI to the other machine, and then the other machine will just read that, and that's how it will read my microphone. So get that working. And then that would prove that I can do like the data crunching on the Kubernetes cluster, right? And then I can start doing that more complicated work to testing a high frequency trading system. And I'll kind of have two tracks at the same time. There will be a high frequency trading system, and there will be a momentum strategy. The momentum strategy is probably more important, but I want to do both. So hopefully I find the time and the attention span to do it. But sometimes I just get there and, you know, it's like, well, I don't actually have enough time to really focus in on this and do it. This is like I need an all afternoon sort of a thing. And you end up playing a game or something like that, you know, it happens. It's kind of hard because my kids, again, one of them is, we believe, level 2, level 3 autistic. The other one is very young and kind of at the same developmental level. And they're both pretty demanding. So they basically have to be supervised 24/7. Cannot be left on their own. So one parent has to be watching them, and it's kind of not fair to make one parent just spend their whole weekend just watching the kids and not being able to do anything, and you're doing whatever you want, right? So there has to be some balance there. That's another thing that makes it difficult. Okay, I had a question. Is there a resource that will help us code the balance range? Okay, so are you asking if we're having, you know, a move and then it kind of gets stuck in a range like this, and I want to know, what is this range? How range bound are we? That sort of a thing. How do you do that? Yeah. I'm going to assume that that's what you're asking and just start answering that question. And if I'm wrong, you can just, you know, explain yourself a little bit further, but I will teach you something that's kind of interesting anyways. Oh, he says, yes, exactly. Store the highs and lows. Okay, yeah. I find this one really interesting because this is something that I struggled for a really long time to kind of figure out and understand. And it's so simple. And once I explain it, you'll realize, oh, yeah, that's why all these other people, they're doing this, right? So what you can do is you can basically say, like, what is the high for the last X bars, right? So in NinjaTrader, there's a method called max. And max takes a data series and a number of bars back. And it basically says, okay, what was the high of the last 60 bars or however long of a time frame it is, right? And what is the low of the last 60 bars, right? And that can kind of tell you, you can use that to determine what is the height of the range and how long has it been range bound for, right? Like you can do a sort of thing where it's like, it's been in that range and the high hasn't been higher than 5,000 for like an hour. But then when I go back further than that, then there is a point where it was higher, and vice versa with this low right here, right? Okay. So the easy way of describing that, like the easy way of saying we've had a breakout, right? We've come out and we've had a breakout is a new 50 period high. New 50, you know, like if we say the look back period is 50 minutes and we just had a new 50-minute period high, that means that we're having a breakout, essentially. And that's how you detect them. That's how you detect a breakout. So it seems stupid simple, right? But you can kind of you know, there's, I guess I kind of explained two things, because there's like, what's the max of this? But then, so you can say if the high of the current bar is equal to or greater than, although I don't think it would ever be greater than, but equal to the 50 period high, then that means you're having a breakout. Da, 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 da. That's simple. Now you can also do these sorts of things like how long have we been in a range? Like I have this one indicator that it does that. It does a look back and it says, okay, we've been in a 2-tick range, but how far back does that go until you break out of that range? And so it just keeps increasing that number. Like what's the high of the last 10 bars, 11 bars, 12 bars until it goes outside of that. And then you have the answer. Okay. I think that there may actually be a method that we'll call that, and we'll say, how far do you have to go before it comes out? Oh, Mohammed Sabars, subscribe to Basic. Thank you very much. You know, I haven't really thought about that stuff and done a whole lot, but for those of you guys that subscribe, if there's things you can think of that you're like, I would like to get this on a regular basis or whatever, there is like a private channel in Discord that we can talk in, and you know, for the people that are subscribing, and do whatever for you. But you don't have to do it. I'm doing pretty good on my own, but I appreciate it. I'm pretty sure I've seen this on the NinjaTrader ecosystem before. Look for it. And I need to reinvent. Yeah, I think that there are some indicators that kind of do that sort of stuff. But I'm also kind of saying that there are indicators that are built into NinjaTrader that do a pretty good job at detecting these sorts of things, right? Will we be able to store the highs and reference if acceptance above balance is being rejected? We can always refer to that high. So you're kind of looking for a situation where we come up here and we can't seem to get above that, and then we get above it and it falls back down very quickly. Right? The way that I would do a trade like that is with what I call checkpoints. So basically, you have a bunch of different conditions that you want to see met sequentially. So like the first thing is we get stuck within a range for a certain amount of time, and the range is a certain amount of size, perhaps, right? So first we see this, and then I see that there is a breakout of the high, but then within X bars of that breakout of the high, we touch the low of that range, and then I want to go short, right? You could do trades like that. So an example, I made a video about smart money concepts, backtesting smart money concepts and proving that it doesn't really work very well. But I posted the strategy for that. It's in the Discord's download channel. And it's in the video description, the link to it. And that kind of shows you an example of how you do that. But basically, you create a Boolean that tracks each one of those checkpoints. So you say, okay, when I get a range of sufficient length, then checkpoint 1 is true. Right? So now I start checking for checkpoint 2, which is a breakout of the high. Okay, so now we've had a breakout of the high. So now I'm looking for a break of the low of that range. And when all three of these Booleans are true, then I enter, right? And if I get to this point and like it's been too many bars and we're still above the range, then I reset everything. I change them all back to false and I reset. And that's how you can do trades like that. I've never been able to find a setup like that actually worked, but you can test them and prove it to yourself. It's kind of funny because retail traders think that these setups are too complicated to program and backtest, but they actually are backtestable and are actually not that complicated. It's just kind of, there's just this one kind of clever, stupid trick involved in it, right? and once you've seen 2 or 3 of those tricks, you figure the rest of them out, and it's just like immediate, like, oh, I know how to do that. I know how to do that. I know how to do that. Until you get into the ones where that's like they look at the chart and they say it's a buy, and you're like, why is it a buy? I don't know. Well, how do you know that you know it's a buy because of news and not the chart? Like, if you don't even know what you're factoring in, it could be any number of factors outside of just the technical analysis that is leading you to the trade, right? But I will say, I want to go back to the momentum thing, right? How does a momentum strategy work? Is if we're doing this sort of a thing, eventually you're going to have a point at which you break out, right? If there is going to be a trend, there is going to be a breakout, right? And so the way that a momentum strategy works is it says every place that there's a potential breakout, we buy it. And then we have a really close stop, okay? These trends go so far that you make more money on the trend than you do lose money on the stop. The hit rate might be less than 50%, but you're making like 10 times the amount of profit on these than the amount of loss on these, right? But in order to let your winners run long enough, you usually have to hold it for multiple days. So that's why these kind of strategies don't really work on intraday basis. I think that's really important to understand. So if you're going to backtest something like that, I would recommend doing it on daily bars or hourly bars. And, doing it with assumptions that you will hold the trade multiple days. Like in the NinjaTrader backtester, there's a little checkbox that says close positions at the end of the day. Do a backtest where that's not checked if you're going to do a momentum strategy. Apex offers 90% off of evaluation accounts, and you can pass in 1 day. Does that mean if you make $3,000 in 1 day, then you've passed it and you've done it? Yeah, that's pretty sketch. It's not so much the SMC concept, it's more the absorption of the lows below the range of balance. Entry signal is much more just want to identify a balance range first. Yeah. You can totally do that sort of thing, though, right? Yeah. Just slightly different qualifications, right? There's a range, it's been established. We can see that it's been going for a certain amount of bars. There's a breakout of the range, but I see massive absorption. Which would be the cumulative delta compared to the number of ticks that it moved in that particular time is like super, super high. That it took a ton of negative orders to push each price. And that's absorption. You could do that sort of thing. I know how that strategy will work out, though. That's a fat tail, for sure. Because most of the time, if you have a breakout, pretty much every time that you have a breakout, there will be absorption there. Because basically what's happened is there has been more time for the liquidity down here to build up and more time for the liquidity up here to build up, right? So there's going to be more latent liquidity down in here. So when you start hitting into those prices, you will see absorption almost every time. But the people that are selling, they're going into that area because they know that there's liquidity there, essentially. They want to hit into that liquidity. So really, it depends on how much they actually have to sell. And so sometimes they're not able to overcome it and they bounce back up into the range. But then sometimes there really is just a massive imbalance and they continue to sell through the biggest iceberg orders, and then those are trend days. And so again, it's a fat tail. Yeah, I would say most of the, maybe 60% of the time it bounces and goes back into the range. But then the 40% of the time that it doesn't, it goes way further. So what I tried to do, this is basically my strategy is this. Okay. I think that it's going to do this. I come in from the very beginning and I say, I think that they're going to do this. I can see right here we're selling. So I want to sell right here and hope that, okay, it goes down and then they get stuck and a range develops. But my position is in at the top of or above that range so that I can hold it all the way through that consolidation period and then catch the second leg. And if not, I'll wait for the second leg to happen and I'll get in here. That's basically what I'm trading most of the time. But I'm not using technical analysis to recognize it, right? This is what I want to see, but it hasn't happened yet. I'm using information that I know about the market, things that are going on in the day, supply and demand, all of that sort of stuff to determine that this pattern is going to happen before the pattern happens. And then as I see it happening, I go, okay, yep, it's all in line with my scenario. Maybe if I cut it here and I start to see that, then I can maybe add in there because that's kind of more confirmation. They've been doing that pass and one day thing for a while now, and it was going to be a one-off, and I guess. So is it like the rules are all the same, but they just get rid of the rule that you have to have multiple days of profits to pass? Because that would make sense to me, because there's a lot of people these days that are just taking like crazy risks with it. Yeah, that's it. Yeah, that's... So that was one of the things that... Because in the beginning it was like, okay, well, you know... The combines, they offer a service. Maybe it makes sense for you, maybe it doesn't. I tried the combines a couple of times at the very beginning of my stream, and then I got to this point where I said, I think with the way that I want to trade, that these rules are actually hurting me. So I'm going to shift and move away from them, right? And that was like one of my most watched videos. That was the first video that kind of made the channel take off. And the longer that one went on, I kept seeing them do things. It was like there was this story where they, one of the guys that founded one of these companies, it basically ended up being a complete scammer. That didn't mean that the company was a scam, but one of the founders was, and it was a really bad thing for them. That I was like, oh, I really shouldn't even be doing like affiliate links. And then what I saw was they started doing all these things to push affiliate links really, really hard. And then they started doing all of these extra things like, we'll let you reset the combine for a fee. And it was like every time that a deal came on, the deal that they were giving was basically like, this is not a deal that helps traders become better. It's a deal that encourages people to gamble. And that was when I really started to turn into, I'm not going to call them scammers or anything like that, because that's not true. They are offering a legitimate service. But that's when I came into I think that people should trade their own accounts. I would discourage people from using the combines. Trying to take a stance against it that's still relatively mild, right? Without being like aggressively anti-combine, but that's why I kind of come out to that the way that it was. And then the other one that really pushed me over the edge was when I saw that micro contracts got introduced and how they reacted to the micro contracts. It was very clear to me that like the micro contracts basically destroyed the entire premise behind their business, and they just kind of adjusted things in a way to convince people to still do it, which kind of ended up being just well, you should do this because you can gamble bigger. Yeah. What sucks, you might as well trade with a $2,500 account because that's about as much as they give you. Yeah. Well, if you're going to trade ES and you're only going to trade like one contract, then yeah. Well, actually, even if you were to trade up 3 to 4 contracts, $3,500 account, right? Because what I would say, you can do the full $3,000 drawdown and you will still have enough margin for 1 day trade contract. So 3,500. But yeah. And think about that. How well, so if you're saving your money, I guess that's 3 years. But to just be able to day trade one contract, or to be able to get enough to sim trade, like get the data, start an account, but just sim trade on the data, that's only $400. So that's like 3 or 4 combines. Most people, they do more than 3 or 4 combines, right? Or you trade micro contracts. And then it's really, like, if it's really about, like, I just want to get the experience, right? Because I think that's the place that a lot of beginning traders come into, is they're like, well, I want to trade. I don't necessarily want to take a lot of risk, but I do want to have the experience of trading. And then hopefully in the future, I can size up and I'll have the money to risk and things like that. That's kind of the approach that they take. Well, put a few $100s into account and trade micro treasury yield futures, and you'll get that experience. And your money will go a lot further. And I think that the experience you get will be better because it's your account and you can trade any way that you want. Okay, so the point of reference in Discord, there is a downloads channel. And you don't have to scroll back very far. It was posted on October 4th, smc.zip. And that was one of the strategies that I backtested that kind of used a checkpoint system. The worst thing with the combine/prop firms, in my opinion, is that when you are funded, it's like a sim account. Such crapola, they shouldn't be called a prop firm. Oh, okay. So on that one, I don't know what the situation is right now, but my understanding of it is that it was one prop firm that was doing that, and they got caught and don't do that anymore. Because if you are saying, like, we're going to fund you, but then when they fund you, they don't actually fund you, you're not actually taking live trades, you're taking trades against the simulator, and they're just paying you if you make a profit on the simulator, that's called a bucket shop and is illegal. So they got caught. Do you need a license? Do you need a what is it called? A 57 or something like that? That might be the case. No, I don't think that it is. I do think you have to pay the professional fee though once you start doing the combine. Well, like once you get a funded account. And let's look it up. I don't think that, like, my recollection was that I like, if you get funded at Top Step, you don't need a Series 57. I think it's okay. So the website that I recommend for this sort of thing is stcusa.com. I don't really know much about their competitors. I just know that this was the firm that Goldman used, and I've done 2. I've done 2 different certifications through this now. I will do 3. When they put out a accredited investor exam, I will do that one as well. And then they have like the list of all of the different ones that they have. I think it's a 57. Let's read it. 57 exam qualifies a person to perform the functions of a securities trader. To pass the licensing exam on the first attempt, choose SDC as your training pro. You probably want to do the Premier Plus, or not the Premier Plus, but the Premier one. So $400 for the study materials. No, let's not do that one. Yeah, Investopedia usually gives very good descriptions. The purpose of the Furious 57 is to protect the public by ensuring that professional traders meet a required standard of professional knowledge and competency. Design. Let's see here. Well, they say it's 57. There's also 55. Series 55. Equity trader qualification examination. So my recollection was that if you were going to be a prop trader for stocks, that you had to take one of these. But that if you were going to be a prop trader for futures, that it was different. Yo, I thought you needed a sponsor for that accreditation, like security clearance, I guess. So some of them you do. So the big one is the Series 7. If you were going to go and work for a bank, like if I was to become a trader for Goldman, this is kind of one of the big things that would be holding me back, is that I would have to study for and pass the Series 7 before I'd be able to do anything with them, right? That one, you have to have a sponsor before you do it. And the reason for that is because these are all activities that happen underneath of the guidance of a broker dealer. So all of the accreditations and so forth that are involved with broker dealers, a broker dealer has to sponsor you. But the ones outside of that, like the one that I took was the first one that I took was the Series 65, and that is so that you can become an investment advisor. Anybody can take that. That's the one that I think is like general enough that like y'all could probably take and pass, and you would know most of the stuff that's in there. Or at least if you're coming in here and like talking on this stream every day for a couple of months, you would know most of the things that are involved in that test. And the only thing that you're actually studying for is the test taking part itself, because you would already have the base knowledge. Memorizing things and numbers and stuff like that they test you on. But let's see here. There's got to be something like Top Step Trader FINRA exam. Show results with Top Step Trader, so put that in there. Show results with exam. Nope. See, I thought that there would be a question on their fact. Top Step Trader. Blah, blah, blah. I go for them because they were the first one, and in my mind are kind of the most. Oh my gosh, they have audio. They have audio on their front website now that is so irritating. No, stop. Where do I turn it off? Oh my gosh. No. So loud. Oh my gosh. You probably couldn't hear that, but that was so loud. It was like, why Top Step, blah, blah, blah. And it's like, trumpet music in the background and stuff like that. Oh my gosh. Fact. Okay, that's better. Fine, I'll accept your cookies. What's the cost? What's the data? Trading combine, blah, 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 blah. Funded account. How long until I get my funded trader certificate? Within 1 to 2 business days. Oh, that's their platform. Payout policy. I don't know. Maybe so. I said Top Step Trader that there's a professional fee. What are the costs in the live funded account? CME professional data subscription, round turn commissions and fees, and platform license or subscription is what they say. Live funded account fees. Surely you don't actually have to take one of those exams and pass it, or there's all of these people that I've seen that have been on those that there's lots of things that they would know about that they don't know about. So I'm pretty sure that you don't. But I think that if you're like doing Futex, because they are doing it in stocks, that you do have to have one of those licenses, like a 55. Yeah, I was trying to prove that you don't need a license for being a funded trader on prop firm accounts. So my understanding of it is that if you're doing like Top Step Trader, whatever, that it's not, because it's futures. But if you were doing like Futex, which is a different thing, but it's still like a prop firm, and they are more focused on stocks than you do. And that part of their program is basically you studying for and passing the Series 55. But I have 65 and I have a Series 3, which is to be a commodities trading advisor or run a commodities trading pool. They just hide the ones that you need license for, probably. Yeah, probably. So, I haven't really thought a whole lot about what the treasuries are doing since that news. They did spike up and come back down. They came back as low as 17, and they're a little bit higher now. So I don't see anything that super strongly suggests a trend to me. But there is a slight uptrend. And I'm also not necessarily seeing things that tell me that it's like gonna find a spot and just dig in there. Maybe you could see that happen. They might have a little bit of trouble trying to get above this, 20 half, where there's kind of like there's a value area high and there's like a larger volume node there for some reason. So I guess that's a spot, but with the way that the liquidity is behaving right now and stuff, I'm not seeing something that's like they're really starting to dig in there yet. It's not apparent. Check out T3. Oh yeah, I've heard of T3. Well, so my experience with T3 was my mentor, I guess. He had these materials that came from T3 trading that explained a set of strategies that were essentially like, you want there to be trends, time frame confluence. So like we're up on both the 1 hour chart, the 1 day chart, the 1 week chart, the 1 month chart, and you're getting a certain doji pattern. So like I went and I back tested those, and there was kind of some interesting behavior in them, but it ultimately wasn't profitable. It was just kind of like the same kind of problems that everything else has, I guess. I don't know. One of the things that I really strongly believe is that there is no such thing as an authoritative source in trading. The only authoritative source in trading is the market. Which means that if you want to prove something, it has to be proven empirically. It has to be, you go and you get the data, and this is the way that it's done. Because everybody wants to tell you, go and find this group of people that know what they're doing and learn from them and yada, yada, yada. And I mean, there is some benefit behind that because, you know, you do learn better from other people and things like that. But the problem is just how do you know that they actually know what they're talking about? Because it's like nobody knows what they're talking about for the most part, from what I can see. And that's why I say the only way that you can really actually know is if they have empirical evidence. They can actually prove the things to you using the market itself, looking at the data from the market itself over a really large data sample, like 5 years or more, then that's authoritative, right? So like momentum strategies. I read a book called Trading the Trend, I think, or whatever. And he does a 30-year backtest in the book. The book is basically a 30-year backtest. That's market data, right? That's authoritative. Most of these places, like prop firms and so forth, they are to some extent trying to rely on reputation and authority. And I just don't think that it exists in this space. I only say that I have the best content because I'm the only content creator out there that I see that actually talks about empirical evidence. If there was somebody else that was talking about empirical evidence, I'd probably be a huge fan. I saw a video the other day. It was from Imam, if you know who I'm talking about, and he's made a couple of videos about smart money concept stuff. And this was like the second or third such video that I saw about the smart money concept sort of thing. And I wasn't so into the video. It was talking about the person. It wasn't talking about the market. I think part of the problem there is that guy, he believes in price action. So what he's trying to do is really the exact same thing as what the smart money concepts people teach. Is just like a different setup, I suppose. But it's like the same kind of ideas and premise. And taking really small profits compared to really big stops. It's all the same stuff. But he doesn't talk about empirical evidence. I don't think he knows how to do that kind of stuff. So I already know that Inner Circle Trader is kind of crazy. The video wasn't that interesting to me, you know? I want to see empirical evidence. Empirical evidence. I feel like if you're not putting some kind of empirical evidence out in front of them, that there's no point in you even sharing the information. Because there's absolutely no way for anybody else to know if what you're saying is true or not. Unless it's backed by empirical evidence. There are some things in life where once you explain it, it's like it's obvious. And it's like, oh, of course, I didn't see it that way. But now that I see, it's obvious that that's the answer, right? But that's never the case in markets. It's never, because you have to see so much data. So anything that you see in the market that seems obvious to you, it may just be random. Because the universe of data that you have to look at to make a conclusion is like this, and you can only see this little teeny tiny part in your head. You can only hold this tiny little part in your head. So you can never possibly, just from your own observations, in you know, like keeping track of them mentally, actually know what's really going on. You cannot do it without writing it down and tracking the data and getting enough samples. It's the only way. Empirical data. Well, guys, it's 8:55, so time for me to get going. I tell you what, today was interesting because we had a lot of interesting different discussions. You guys brought up some interesting stuff, but it was also like you'd bring something up and I was able to go for a long time off of each of them, so that was kind of interesting. But especially our earlier discussion about like woke movies and things like that. That's one of those things where it's like, oh, you know, if I wasn't doing this, what are some of the other things that it would go into? Well, woke movies would be one thing that I would love to complain about and do stuff about, but whatever. For the next discussion, what are your thoughts about choppiness in the market? Do you think it happens because too many orders in the opposite direction? Well, oftentimes when you see a choppy market, it means that nothing is happening, actually. It kind of means that, like, there's no reason for the market to be moving, but there's not a lot of liquidity in that one area, and so it just kind of dices around in that one area. And you'll see these kind of breakouts on both sides because there are people that want to buy and sell, and they're not finding enough liquidity. And so they kind of have to hit into the sides of it and get these breakouts. But then those breakouts kind of like quickly sputter out and go back the other way, and you get choppiness. Right? I always think of it as like the market's not doing anything, or there's a large meta order at work causing a trend. And if there's not a large meta order at work, then I kind of tune it out. Is PMI data bearish for the NASDAQ and ES? I'm not sure. I felt that the market overreacted to the PMI data, but it was kind of mixed. You know, like manufacturing was still up. So, hey, Jiwi, how are you doing? You're coming right in when we're leaving, though. I understand, though. You got stuff going on. Let's, what should we put for today's title? NVDA the day after. That's really what is the most key thing about today that would help me remember it in the past. Took that job, it's very chaotic. Well, good for you. Get that back. Get your financial security and then come back and swing big. Yep. Okay. I should be going though, guys. I will see you tomorrow. In the meantime, stay excellent.